Friday, August 14th, 2020. Today I have the pleasure of speaking with Peter Schiff. Exactly 3 months ago, I spoke to Peter on May 14th, 2020. At the time, the price of gold was around $17.40. Today, we're $200 higher, around $19.40. We have pulled back this week. Just wanted to ask Peter first about the fundamentals, what he sees for gold and silver going forward.
Well, the fundamentals, I think, are great for gold and silver. They're horrible for the United States. In fact, a lot of other countries, central banks are making similar but not as dramatic mistakes as ours. But gold's going to keep going higher. As long as central banks are creating money and debasing their currencies, the price of gold is going to go higher, because it's really not gold prices going up so much as currency values going down. So, for instance, you now need $200 more to buy an ounce of gold than you needed when I was, talking to you a couple months ago. And the dollar is going to continue to buy less gold, but it's going to buy less of everything. The price of everything is going to go up, but especially the price of gold.
Yeah. What about silver? Do you see silver having the same fundamentals as gold? Do you see the gold-silver ratio going even further down? I mean, I think we're around 73. We've come from like 125.
Yeah, that was the cheapest silver had ever been in history relative to gold. But yeah, I think that you're going to continue to see the US dollar losing value relative to silver. Silver is also a monetary metal like gold, and so people will seek out refuge from this monetary storm in silver, the way they also look for refuge in gold. And I think you're going to see that gap closing, the ratio coming down, meaning that silver will get more expensive relative to gold as the bull market in both gold and silver continues.
Yeah, and one thing I wanted to touch upon is my Webster dictionary from the 70s, because I've seen there's been a lot of debate about the definition of inflation. And I saw actually on your Twitter account that you have a definition from 1913, which I think is even better than the one from 1973 or thereabouts, because it doesn't really mention prices. It just mentions that it's the inflation of paper money and the currency. And I think I saw your debate with Jim Rickards. I've had Jim Rickards on the channel, and I respect him, but I don't agree with him on that either. And I think it's a way of the central bankers and the politicians to keep inflating without the people knowing it. Can you just go quickly over that?
Yeah, well, the origin of the term inflation always related to the supply of money. Because if you think about the word inflate, literally inflate is to expand, right? When you inflate a balloon, you're filling it with air, and the balloon is now expanding to accommodate the air that you've now blown into it. So prices don't expand. They don't contract. You can raise prices or you can lower prices. So prices can go up and down, but they don't expand. But inflation referred to money supply, because the money supply expands. You can create more money, and so you expand the supply. Deflation referred to a contraction of the money supply. Now, one of the consequences of inflation, right, when you create more money, inflate the money supply, one of the consequences is that prices go up. It's a result of inflation. It's not inflation itself, but it results from inflation. Now, inflation doesn't always cause prices to go up, because maybe prices would have gone down without the inflation. And so what happens is they go down less. But inflation is still resulting in prices being higher than otherwise would be the case if the inflation never took place. But since the public, doesn't like rising prices, the government over time changed the definition of inflation from the expansion of the money supply to the consequence of that expansion, which was rising prices. And they redefined inflation as its effect rather than the inflation itself. And the reason they did that is so they can confuse the public as to the source of inflation. Because when you properly define inflation, as an expansion of the money supply, and you point out that that results in rising consumer prices, well, it's clear whose fault it is, because the government controls the money supply. It's the central bank. So if inflation is a problem, then the government is the source of that problem. But once you redefine inflation as being rising prices, well, then it's easy for the government to blame price increases on something other than the inflation that the government has created. They can blame it on labor unions, on greedy corporations, on speculators, on foreigners, because you're focusing on prices. Obviously, the government's not raising the prices. Somebody is raising them, but they are raising them in response to the debasement of the money supply. I mean, it makes sense. If you create more money and you don't produce more goods, now the goods have to be more expensive because you've got more money bidding up prices. Money just allows you to divvy up the goods that already exist. But I don't like it when so many people want to adopt the government's false definition, because it lets the government off the hook. And if you confuse inflation for its effect, it results to a lot of bad policy, because you have all these central bankers looking at the CPI and claiming there's no inflation as they continue to create more and more inflation. Eventually, all that inflation is going to cause a massive increase in consumer prices. But of course, by then it's too late to do anything about it.
And we also get all these bubbles that are seem to be getting bigger and bigger since Nixon closed the gold window in 1971. Yeah. Maybe you could go through the evolution of the bubbles and which bubble is going to be the one that blows up now. I think it's a currency bubble, but
yeah, well, inflation does a lot of damage other than causing prices to go up, because some of the prices that inflation can affect are the price of financial assets. Stocks can be pushed higher by inflation. Bond prices can go up as a result of inflation. Real estate prices, right? That's what's been happening. Now, the problem is a lot of people like that because it makes them feel richer if the value of the assets they own are going up. But of course, it's not a good thing for the person who still wants to buy a house, and now it's more expensive because inflation has pushed up the price. But when you do that, you also distort the economy. Decisions are made based on asset prices that are unrealistically high as a result of inflation. And of course, a lot of the inflation is generated through the artificial suppression of interest rates, which also has dangerous consequences for the economy. It leads to excess consumption, excess debt, a lack of savings, a lack of production. So you really exacerbate these economic imbalances that underlie the economy. And you can't just look at the CPI and assume that no damage is being done when you're ignoring a tremendous damage that is being done in the economy. Ultimately, the consequences show up when the bubbles pop, and we have to deal with the aftermath of all the bad decisions that we made when the bubbles were inflating.
Yeah, so like the last big bubble was the housing market bubble. Before that, we had the dot-com bubble. I guess we had the tequila crisis, the Latin American bubble, credit bubble. Do you think the everything bubble will eventually lead to the collapse of the fiat dollar?
I think so. I mean, I think the air started to come out of this bubble in the fourth quarter of 2018. That's when you had this big drop in the stock market. And that's really what caused the Fed to reverse course and start cutting rates again. And that ultimately led the Fed to resume quantitative easing, even though they pretended it wasn't quantitative easing. Remember, they said it was not QE. That's exactly what it was. But once COVID came in, they had to drop the pretense. And now everybody knows we're back to QE. In fact, QE4, or whatever you want to call the latest version of it. But this is already larger than 1, 2, and 3 combined, which is something that I had forecast from the beginning. And of course, the Fed is back at zero. But I don't think the Fed is going to succeed in blowing up a bigger bubble than the one that just popped, like they succeeded with the housing bubble being bigger than the dot-com bubble, or the everything bubble being bigger than the housing bubble. There is no bigger bubble that the Fed has up its sleeve that it can inflate. It's done. And so I think now what's going to happen is we're going to prick the dollar bubble, and the dollar is going to collapse. And just like in 1971, the U.S. went off the gold standard, sometime soon, the world is going to go off the dollar standard, and the world will return to the gold standard, which was the standard prior to the adoption of the U.S. dollar. And remember, we only got the world to agree to accept the dollar as the reserve because the dollar was as good as gold as far as everybody was concerned, because not only was the dollar backed by gold, but it was redeemable in gold at a fixed amount. And between the time that foreigners accepted dollars and redeemed their gold, they could take those dollars and buy U.S. treasuries and earn, 4, 5, 6% interest, whatever the rates were back then. Well, they can't do that anymore. The yield on a 10-year treasury is about 0.5%. That's less than even the official inflation rate, and the dollar's backed by nothing. So it doesn't make any sense for the dollar to be the reserve for anything. And I think the world is going to move past the dollar and go back to gold, and that is going to have a massive consequence for the United States, because we have been living beyond our means, riding on this global gravy train. We're able to consume more than we produce and borrow more than we save only because of the dollar's role as the reserve currency. But once the dollar is relegated to the status of any other currency, then Americans need to save if they want to borrow. Americans need to produce if they want to consume. And that's going to be a rude awakening and require a significant reduction in our current standard of living.
Yeah, I guess that's the old exorbitant privilege, which I think Valéry Giscard d'Estaing, who was the finance minister of France, said back in the 60s. I've noticed that bond yields, like the 10-year and the 30-year in the U.S. treasuries, have started coming back up, even though a lot of people out there, the mainstream economics, profession, Wall Street, they all think rates are going to keep going lower because the Fed is going to do more QE. Do you think we need to see bond yields go up and bond prices collapse to see a collapse of the dollar, or could it be done through the gold price, for example? You could have bonds not do much, but if gold goes to 10,000, that bond isn't worth that much more, even though the price hasn't really dropped.
Yeah, well, look, bond yields are still extremely low, even though they're not quite as low as they were on the absolute lows, right? We've moved up a little bit. It's hard to say for sure whether or not we've reversed the trend. Eventually we will. I mean, eventually bond yields are going to go way up because, inflation is already considerably higher than the bond yields, even the way the government measures it, which is inaccurate. I mean, prices, which again are the result of inflation, are actually rising quite a bit more than what the CPI would reveal. So people are losing money in real terms owning U.S. Treasuries. So the yields have to go up. The Fed is trying to suppress them, but it can't do that forever. And, so as there's more selling pressure that's going to come into the U.S. Treasury market, especially as we continue to run these massive deficits, we keep adding to the global glut of treasuries by putting more and more onto the market. And, and as the Fed continues to have to buy up these treasuries to keep suppressing rates, it can only do that with more inflation. It has to print money to buy those bonds, but the printing of money simply sends the dollar's exchange rate down and ultimately puts more upward pressure on consumer prices, meaning it puts more downward pressure on real interest rates. So the more money the Fed prints to artificially suppress interest rates, right, the more inflation they create, which means they only make the real rates even lower, which creates an even bigger incentive for more people to sell the treasuries, until ultimately at the end of this cycle, there's only one buyer remaining. The only entity that would buy U.S. treasuries is the Fed. And the only way it can do it is by creating inflation. So then you get into the potential of hyperinflation where the dollar completely collapses.
Can we look into the political landscape? I saw that Kamala Harris said the other day that she wants a $10 trillion Green Deal. So can you just tell the viewers that I personally think, and I think you think the same way, it won't matter who's in power, they're going to keep inflating and spending, and the debt is going to keep going up?
Yes. I mean, look, both parties agree that we should have big deficits and that the Fed should finance them. I mean, if you look at the current debate now over the next round of so-called stimulus, the Democrats want the government to spend $3 trillion and for the Fed to print the money. And the Republicans only want the government to spend another $1 trillion and to have the Fed to print the money. So it's the same principle, right? Both the Democrats and Republicans want bigger government and they want to pay for it by printing the money. It's just that the Democrats want even bigger government and even more money printing. But, you know, they all want the same thing. And so it's really hard to have a debate. The Republicans really can't challenge the Democrats on any kind of principle when they've accepted the principle. You can't really say, well, printing $3 trillion is too much when you're in favor of printing $1 trillion. I mean, if $1 trillion is good, why isn't $3 trillion better? They really don't have a valid argument once they've conceded the whole debate to the Democrats, and now they're just arguing over how much to print. I mean, they actually look stingy. It's like, hey, why don't you want people to have this extra money? See, they can't talk about the negative consequences of printing $3 trillion because that same would apply to printing $1 trillion, right? So they don't want to stand up for capitalism and say, no, we want smaller government. We want sound money. No, they're for deficit spending and monetized by the Fed. They just want less of it than the Democrats. But, I think when it comes down to an election between two Democrats, which is basically what this election is about, which Democrat do you want? I mean, usually the Democrats will win when that's your choice is between two Democrats. You might as well pick the one that's promising the most free stuff. And that would be Biden-Harris. But, at the end of the day, none of this matters. I mean, they all think that we can have everything for free so long as the Fed prints the money to pay for it. We're going to find out the hard way that ultimately they can print as much money as they want, but they can't print purchasing power and they can't force anybody to accept it. So ultimately, they destroy the value of the money they're printing by thinking there's no limit to how much they can print. And then it doesn't matter how many they print. It doesn't matter how many zeros they put on your dollar if nobody will accept it and it has no value.
Yeah, and I saw also you talked about Trump's executive orders, the 4 executive orders, how bad a precedent that is if you get Biden as president, or even him again, that the executive can just decide to take Congress's power of the purse.
Yeah, and it would be one thing if Trump was using the authority he believes he has to actually cut government spending, to eliminate some agencies and departments, right? And actually relieve the public of the burden of the big government. Actually, using this to advance a supposedly Republican agenda. Instead, the president is using this authority that he's really usurped to make government bigger, to spend more money, to borrow more money. I mean, why are conservatives celebrating this? I mean, they should be upset at it for both reasons. Both that he is basically overstepping his constitutional authority. We have a system of checks and balances. We have an executive that doesn't make the laws. Trump has to sign a law, or if he doesn't want to sign it, Congress can override him with a 2/3 vote. But the president can't legislate. We have a legislative body that does that. All he's supposed to do is implement the powers that were given to the executive. He can use executive orders with respect to the powers that he has, but he can't just usurp congressional powers. We just can't legislate through executive order, and that's what he's doing. And he's also changing acts of Congress. He's changing, the payroll tax. He's saying, "Oh, we're going to have a holiday. We're going to just defer the tax. Nobody has to pay it." I mean, how is he able to do that? I mean, he doesn't have the authority to do that. I mean, I don't like the payroll tax. I'd like to see Congress repeal it, but then we also have to get rid of Social Security. I mean, the payroll tax is supposedly what's paying for Social Security. Well, how are you going to get rid of the funding mechanism, but then not get rid of the benefits that are being funded? I mean, you have to be honest with the public. You don't want to pay the payroll tax? Great. But now we got to do something about Social Security. So we can't just have our cake and eat it too. Just pretend that Social Security benefits are free because the Fed is going to pay for them all, because that's what Trump wants. Trump says we're going to get rid of the payroll taxes, but we're not going to make any cuts to Social Security. So we're just going to have the Fed fund Social Security. Well, if that worked, why did we do that from inception? What was the point of having all these taxes if the Fed could just print the money? And just to remind your audience that what's happening now is the government is financing all this expenditures with an inflation tax. I mean, that's basically what they're doing. The government has two ways of taxing you. They can do it honestly by taking your money, or they can do it dishonestly by taking your purchasing power. And that's exactly what they're doing. They're just spending your purchasing power by creating money and giving it to other people to spend. And so people need to act quickly. That's why I'm out here trying to get as many people to get rid of their dollars. That is what's being taxed. If you're an American, the Fed is taxing you for holding dollars, which includes bonds. Any asset that's dollar denominated is going to be debased along with the dollar. And so you want to get into gold, you want to get into silver, you want to get into foreign stocks, commodities, emerging markets. There are a lot of different ways to avoid this inflation tax, but the key is that you do it quickly before inflation really erodes away the value of the cash that you have, and then the assets that I'm helping you buy become too expensive.
Peter, thank you very much for your time. I appreciate it. To my viewers, if they want to look at Peter's work and his businesses, I recommend they go at Peter Schiff on Twitter. He's CEO of Europac, chairman of Schiff Gold, and founder of Euro-Pacific Funds, Euro-Pacific Bank, and he's the host of Schiff Radio. Thank you very much, Peter. Have a great weekend.
You too.